Have you ever thought about leaving money to charity in your will? Well, if you're like most Canadians, you donate on an annual basis to some of your favorite charities. And if you're like most Canadians, you haven't done a planned gift inside your estate plan or in your will, as you want to make sure you maximize the value of your estate for your family. Well, are you aware you can redirect money to charity that normally would be used for income tax without reducing the value of your estate to your family? Well, by the end of this video, you will discover how you can use the Canadian income tax system to do exactly that, as Canada has the most generous tax rules in the world when it comes time to charitable giving. My name is Rick Goldring of the Bay West Group, and for the most insightful information on wealth and risk management strategies for business owners, including doctors and dentists, make sure you subscribe to my channel and press the notifications bell to be notified when we upload new videos. The Canadian Association of Gift Planners has embarked upon a campaign called Willpower. The objective of Willpower is to increase the percentage of Canadians that leave money in their wills to charity from 5% currently to 8.5% over the next decade or 15 years. And by doing so, that will relate to or end up with $40 billion going to charity that isn't going to charity now. In Canada, there's 85,000 registered charities across the country. We're fortunate to have great faith communities, medical institutions, and educational institutions, along with arts and culture and recreational organizations, along with social agencies and foreign aid agencies that make a difference each and every day in the quality of life of Canada, making Canada one of the very best countries to live anywhere in the world. There are many ways you can leave money to charity. You can leave money in your will. You can leave money as a percentage of your RSP or RIF. You can donate marketable securities like stocks. And you can donate life insurance to charity upon your death as well. Now, it's very easy to amend your will to leave a specified amount or a specified percentage to charity. Very easy to do that. You can also contact the issuer of your registered retirement savings plan or your RIF and leave money to charity that way and put on the charity as a percentage of the RRSP or RIF. That will create a tax deduction and help maximize the amount of money you leave to charity, as well as minimizing the tax and maximizing the amount you leave to your family. You can also donate cash to charity, whether you're alive or upon your death. And a $50,000 donation, for example, costs you about $25,000. For every $2 you donate to charity, you save about $1. There are too many people, though, who have cashed in a stock where they've had a capital gain to get money to pay to charity or to donate to charity. Whereas you can actually transfer a specific stock to charity or a specific part of your portfolio to charity. So say you have a stock that you bought for $25,000 that's now worth $50,000. You can donate that to charity, receive a tax receipt for the $50,000, and not have to pay tax on the capital gain. So that $50,000 donation doesn't cost $25,000, it costs you about $19,000 because of the tax receipt, as well as the tax savings, not paying the tax on the capital gain. Now, life insurance is an elegantly simple tool to leave money to charity upon your passing. And you can do this in a number of different ways. You can donate an existing policy to a charity. Donate the ownership to a charity. They give you a tax receipt for the value of the policy, and if you continue to make premiums on the policy each and every year, you receive a tax deduction or a tax slip for the amount of money that you're donating to the charity to pay the premium. In addition, you can change an existing life insurance policy, change the beneficiary, make it the charity, and that's going to create a pretty significant tax benefit for your executors and your family upon your death. And finally, you can actually buy a new life insurance policy, and it's very simple to do that. You buy a new life insurance policy, you donate it to charity, and you donate the premiums or the value of the premiums every year to charity. Let me give you two examples. Female, age 50, non-smoker, healthy, successful business owner, likes the idea of donating $10,000 a year to charity to pay for a life insurance policy, but she only has to pay for 10 years. So in the first year, if she dies, $129,000 goes to charity. Upon her death, say at life expectancy, age 87 or age 90, there would be approximately $500,000 there payable to the charity upon her death. Now, think about it. That $100,000 that's been donated over 10 years has really only cost $50,000. And that $50,000 from age 50 to 60 that's been donated net to the charity, that $50,000 turns into $500,000 over 25 or 30 years. That's actually a 6 to 6.5% after-tax return on that $50,000. That's a significant benefit by doing it that way. Also, you could take a couple, married couple, age 70, and you don't have to be 70, you don't have to be 50. I'm just using these as examples. Married couple, both age 70, non-smokers, again, $10,000 a year for 10 years. In the first year, if they both die, there's $101,000 payable to the charity. If death occurs more like at life expectancy, more like at age 95, there would be approximately $250,000 that would be payable to the charity without impacting. In fact, both examples I just gave does not impact on your existing estate that's going to go to your family. If you'd like to discuss any of these strategies to see if they fit into your overall financial plan, click on the link below to arrange for a complimentary introductory meeting with me to determine if there's a fit between your set of circumstances and the type of services I provide. And if you like the video, please give it a thumbs up, subscribe to my channel, and share it with a friend. For the most complete information on wealth and risk management strategies for business owners, including doctors and dentists, subscribe to the Goldring Financial Leadership YouTube channel.